it seems like gold performs really well when the market anticipates a pause in rates or a lower rate. Right now, for instance, today we're seeing a drop in gold because the Jerome Powell, before his testimony in front of Congress, he came out and was very, very hawkish, maybe insinuating even a higher interest rate needs to come into play. So I think right now, as soon as the Fed goes to the sidelines and even stops hiking, that's where gold will take off. Right now, though, again, we have to watch for that to be the next catalyst. But I do think that gold, again, tests the 2070 highs from I think it was 2021, and even going back to 2019 or so. Those highs should get tested this year.
In today's video, Gareth Soloway, an esteemed authority in the areas of macroeconomic analysis, technical chart analysis, and trade signal alerts, provides his perspective on the state of the gold, Bitcoin, stock market, and the global economy. According to financial expert Gareth Soloway, gold's potential as a safe haven asset and hedge against inflation has yet to be fully realized this year. However, Soloway notes that gold prices have been steadily rising since November, driven by market turbulence, increasing recession fears, and central bank gold purchases, which have boosted demand. As a result, the gold market has experienced a surge in inflows, driving the XAU spot price to a peak of $2,070 on March 8, 2022, its highest value in over 6 decades. Although the price has since declined to around $1,800, Soloway remains optimistic that gold will eventually reach its all-time high in the near future. According to experts, it is our opinion that central banks will pivot on their rate hikes and become dovish during 2023, which will ignite an explosive move for gold for years to come. Before proceeding further in this video, please make sure to click on the subscribe button below to stay updated with our latest content.
Gold, again, is one of those where, you have to look at it and say, okay, if the Fed really causes a tailspin in the economy to get inflation underneath 2%, then gold is still attractive because it's a fear trade. When people fear the economy, then they fear being in stocks, they rotate to gold. If the Fed says, hey, listen, we got to start cutting interest rates, we got to kind of do all that, well, then gold's an awesome investment as well. So I'm still in the camp that in terms of risk versus reward, gold is still the place to be for safety. Whether or not it's going to be the best performer this year between the S&P and the Bitcoin chart, I still am in that camp, but so far it hasn't been that way this year. I still think that, again, this is a short-term thing. Even if they hike 50 basis points, you're going to have over the next couple months some weaker data and maybe even weaker jobs data that's going to push the Fed back to basically neutral, meaning they're not hiking anymore. And that's going to be the bull case for gold. So we've had this big move off the lows of November in gold. It's now having a retrace, which is very, very normal. For me, I think generally this 1800 level remains very, very strong, and I would expect a move up that takes out this trend line at around 1945 and eventually blasts off to this double top up here around 2070.
On Friday, the value of Bitcoin experienced a brief 8% drop below $20,000, reaching a low not seen in nearly 2 months. The decline was attributed to a sell-off in the U.S. stock market and the collapse of a lender focused on cryptocurrency. Soloway believes that the increase in interest rates in the past year has negatively affected risk assets, including cryptocurrencies and stocks. Recent market volatility may persist in the coming days, as suggested by experts. During the latter part of 2022, Bitcoin showed a significant correlation with U.S. equity markets, which was a notable characteristic of the ongoing bear market. In November, the cryptocurrency had plummeted by as much as 77% from its peak of $69,000 in 2021. Analyst Gareth Soloway predicts that Bitcoin may drop below $20,000 in the near future. These developments indicate the need for cautious investment strategies in the cryptocurrency market. According to Gareth Soloway's prediction, Bitcoin prices may potentially drop below $19,000, leading to a further decline towards $18K, $15K, and even $12K.
And so for me, this is just a bear market rally. I still think there's lots of downside on crypto. Eventually, it's, in fact, you're making a bear flag right here, classic bear flag formation. Target near term, 18,000 and change, kind of 18.2 or so. But ultimately, I still think that there's more downside, and we'll go to 12 to 13,000 and eventually 9,000. And the kicker for this is not necessarily regulation. I actually think regulation, whenever it debuts, will be a positive thing for crypto. I think for me, it's more the equity markets and the risk off. So when we start seeing, and imagine we do go into a recession and the stock market drops 25% more. The question is, Bitcoin's trading at 22,200 right now. When we drop 25% on the S&P from the all-time highs, Bitcoin dropped from 69,000 to 15,000. So where's it going to go if we lose 25% in the stock market again? And that's where that lower target comes in, where I do think that we do probably see, 12, 13, maybe even 9. And specific rules on reporting and being open with the books, I think that does give the positive. And that's my bull case longer term, where eventually, yes, the equity markets collapse, pushing Bitcoin lower. But at some point, if we are in a drawn out recession, big institutions are going to say, well, we got to make our money somewhere. Well, now we can make a case for Bitcoin being the digital gold. We know the transparency is there. We can start inching into that and actually accumulating that as a way to get returns during a prolonged recession.
According to Soloway, breaking the 4,200 level to the upside could be a highly positive signal, potentially leading to new highs for the S&P in 2023. Meanwhile, the US dollar index has seen an overnight surge of 1.3%, reaching a 3-month peak of 105.65, indicating the dollar's strength against a basket of 6 major currencies. An increase in interest rates by the Federal Reserve typically results in a corresponding uptick in the dollar index, thereby garnering heightened investor interest.
We have, and I think this is a really important chart of the S&P to zoom out to when we were at the all-time highs back in December of 2021, because what we saw basically one leg lower, 2 legs lower, and then 3 legs lower. And from that third leg lower, even though we've rallied off the lows, you can see it's kind of a bear flag development or a bear wedge pattern. And so my expectation is that we're going to start to break below this upsloping trend line here. And once that happens, you'll have a few stopping points along the way. But my guess is within about 6 weeks, we're back to the the February 2020 highs, which were the pre-COVID highs just before this dip in COVID. So again, for me, this is a period of consolidation. It's also a period of hope, which is kind of a sad thing to say, but we've seen stocks like GameStop and AMC and Bed Bath Beyond and, crypto's really caught a bid. People have been trying to relive the glory days of 2021. And unfortunately, the difference is you have interest rates where they are. You don't have the government sending checks to Americans. You don't have quantitative easing. So it's way different. But there's this tendency for human psychology to really want to revisit those good old days. And I think that's what's been keeping the market up. You've seen buy the dip come back in the stock market as well. And I think at some point, we're going to see a breakdown of that. To me, if you look at this chart, we're still making lower highs. And I think institutions are playing the smart game here and unloading into that small investor buying. And that's never a good thing. That means lower lows are coming. Just having a monstrous move today. Obviously, the metals being down like this, that's showcasing what the dollar's doing in the inverse. And so the big question is, are we breaking out of this little resistance area on the dollar? And if we are, then you have another move up on the dollar that could continue. In my analysis, this would be your next target price. So we're looking at around 108, just under 108, which again, if that happens, it's going to push gold down a little bit more. It's going to push silver down a little bit more, and it's going to push equity prices down even more so. So again, I'm not sold yet on the fact that the dollar is really breaking out here because we're just peaking above this trend line. But what I'll be watching for, and this will be the big data point of the week, is that jobs number on Friday. If the jobs number comes in very strong, then the dollar's going to rip higher. If the jobs data comes in a little bit weaker than expectations, I think the dollar starts to pull back and recognize that the Fed will do 25 basis points. But then there's a possibility with the jobs numbers weakening, maybe they'll go to the sidelines. And again, that would be hugely bullish for the metals.
Experts believe that if we see any signs of weakness in economic data and it results in lower rate hike expectations, it will be supportive of gold. According to Soloway's predictions, he believes that gold will experience a significant price increase in 2023. That's all about today analysis. What do you think of Gareth Soloway's predictions for gold and cryptocurrencies performance in 2023? Do you agree or disagree with his outlook and why? Share your thoughts in the comments section below. If you found this information helpful, please consider giving this video a thumbs up and subscribe to our channel. We look forward to bringing you more updates in the future.